Assalamualaikum and a very good afternoon to all my students. Today we will continue our chapter on the chapter 1 Introduction to Accounting. And in this chapter, I hope that my student will understand what accounting is all about. This is your table of content for this chapter, and today we will learn together on what is accounting, history and development of accounting, definition and comparison between accounting as well as bookkeeping, and we will learn about the branches of accounting, the objective of general purpose of financial accounting and reporting, users and uses of accounting information, component of financial statement, types of business formation, and last is qualitative characteristic of useful financial information. And these qualitative characteristics are taken from the conceptual framework of financial reporting. This is the intended learning outcome, the ILO, for this chapter, and I hope that at the end of this chapter all of you should be able to first is define what is accounting, know the history and development of accounting, define and compare between accounting and bookkeeping, and know that which one comes first, is either bookkeeping or the accounting. Know and understand the branches of accounting and what are the sub branches of the accounting as well. Explain the objective of general purpose of financial accounting and reporting. Know who are the users and the uses of accounting information, means that you know the users and why they need accounting information. Know and understand all the 5 components of financial statement, and know and understand the 3 types of business formation, and the last one is to understand the qualitative characteristic of useful financial information. And this info we gathered from the conceptual framework of business of financial reporting. Now let us look at the definition of accounting, or what is accounting. You can Google any definition of accounting in internet, because there are a lot of definition of accounting. This is one of the definition accounting that stated that accounting is an information system that provides quantitative financial information to internal as well as external stakeholders about the economic or the business activity and transaction, as well as the business condition, so that the stakeholder can make business or economic decision wisely and accurately. And for the definition of financial accounting is the maintenance of daily record of all the financial transactions, for the preparation of suitable information regarding the financial affairs or matters of a business or organization to be used by various users. And the financial accounting also helps to classify, analyze, summarize, and record all the financial transactions for the purpose of the preparations of the financial report of the company. And after this, we will learn about the bookkeeping and the accounting and the differences between bookkeeping and accounting. And in this point, it stated that accounting is the act of collecting or gathering, recording, analyzing, and interpreting the financial transaction. Actually, some of these activities are related to bookkeeping as well as the accounting. So bookkeeping comes first and accounting comes later. And after this, we will learn about the differences between accounting and bookkeeping. This is the history and development of accounting. This subtopic will not be tested in any quiz or test. This is just the information given to student so that student will understand and know the beginning of record keeping during those days. During those days, the business transactions between two parties are recorded by a scribe on a clay tablet. And then the tablet serves as a record of the transaction and provide protection to each party or both parties. And then the scribe is the predecessor to a modern accounting that we use today. And during those days, the Greeks record every transaction and also their procession to protect the property of God. And since the business transactions are commonly conducted by barter, the documentation during those days is very descriptive. And during the manorial England during those days, accounting records are kept to ensure that rents, fines, and taxes are collected in a timely manner. Now let us look at the development of double entry accounting. During the Old Italy, the commerce industry are being introduced and the trading center are developed rapidly during the Old Italy century. Literacy is more widespread. Currency instead of barter system is used. International banking system is introduced and the use of credit is prevalent. And during those days or during the Old Italy in the commerce industry, it is also common for two or more people to pool their resources and form a partnership. And that is why the partnership and that are the time when the partnership is created during the Old Italy. And after the partnership, then we go to the corporation, and when the corporation being created later on. But before that, let us know about the Luca Pacioli, which is the father of accounting. Luca Pacioli wrote a book entitled Everything About Arithmetic, Geometry and Proportion, with 36 short chapters on bookkeeping, or later on known as the method of Venice. Luca Pacioli recognized three important books in accounting system, which is the memorandum, the journal, as well as the ledger. And now, after the partnership, now we start with the corporation and the standardization of accounting. The Industrial Revolution that started in England leads to a divergence between the internal and the external accounting, and this time the corporation being introduced during the Industrial Revolution that started in England. And during that industrial revolution, the cost accounting and the accrual basis of accounting are introduced. Now let us know more closer with Luca Pacioli, the father of accounting. During the Luca Pacioli era, Luca Pacioli is the father of accounting, and during his era, he introduced the debit and credit. Debit comes from the Italian word which is debito, meaning owe to the proprietor. Credit is from Italian credito. Debito, credito. Owe from the proprietor. Owe to, owe from. And there are 3 books created by Luca Pacioli, which is on the memorandum, the journal, as well as the ledger. Okay, before that, let us know more closer. Luca Pacioli was a Franciscan friar born in Borgo San Sepolcro in what is now known as northern Italy in 1446 or 1447. He is best remembered for his 615-page mathematical companion named Summa di Arithmetica Geometrica Proportionit and others, published in 1494, and for his friendship with Leonardo da Vinci. And many accountants perceive his greatest contribution as being the 27-page treatise on double entry bookkeeping and business contained within his Summa. And today, we all still teach double entry bookkeeping, same what I will teach you in this subject on double entry system, which is being introduced by Luca Pacioli. And now we will learn on what is double entry bookkeeping, which following the principles set down by Luca Pacioli during those days, and all manual and computerized accounting system owe much of their processing logic to the principle and processes he described earlier. And all this accounting, we need to thank Luca Pacioli, because by using his principle, the simplest way, we can record our accounting or our business transaction accurately, wisely, and properly. Thank you to Luca Pacioli, because you introduced accounting, and accounting being used worldwide nowadays and being used by all organization and company. Now let us look at the definition of accounting and bookkeeping. There are differences between bookkeeping and accounting. And for bookkeeping, the position for bookkeeping is the bookkeeper or the account clerk, while for the accounting, the position is suitable to account executive and accountant. Okay, now let us look at the scope between the bookkeeping and accounting. Bookkeeping involves only on the basic level of accounting. For example, the collecting, classifying, identifying, recording the economic event or accounting transaction, and summarizing the business transaction. And therefore, the bookkeeping is only a part of the accounting process. In accounting, the first stage is on bookkeeping, collecting, classifying, identifying, recording, and summarizing. On the next level, the accounting involves the process of identifying, measuring, recording, summarizing business transaction in monetary unit, interpreting the financial data of the business in order to first assist the stakeholders in making decision, and the second one to communicating the economic event of an organization to interested users of financial or accounting information. And accounting is used by individuals and business entities to record their financial transaction and measure their financial performance by determining the profit or loss of the company. And now we go to the purpose of bookkeeping and accounting. For bookkeeping is to provide financial information to enable the accountant to proceed with the remaining stage of the accounting process. While for the accounting is to produce financial statement to enable users and interested parties to make comparison, plan, forecast, estimation, as well as the decision. By looking at this diagram, students should be able to differentiate and compare between accounting and bookkeeping. In the first stage of accounting, we call it bookkeeping. Bookkeeping involves collecting, classifying, identifying, measuring, recording, and summarizing of the financial transaction and financial information. And next, the second level is accounting. Accounting involves the activity of analyzing the financial information and transaction, interpreting the information, and preparing the financial statement of the company, and at the end of the day communicating the result to the management, to the internal and to the external users of financial information. And this is the definition of the term used to differentiate between bookkeeping and accounting. And this is the term used in bookkeeping and accounting. The first one is classifying, identifying, measuring, recording, summarizing, analyzing, and interpreting. And the last one is on communicating. Okay, the accounting data from business document are arranged and categorized. For example, business document, there are receipt, invoices, and cash bill are being classified and sorting the accounting data or the receipt, the invoices, and cash bill into orderly manner and meaningful categories. For example, payment, purchase, sales, and others. Then measuring involve the translation of economic event or transaction into financial terms. For example, ringgit and cent. And then the transactions are then recorded in the book. For example, journal and ledger, and business or accounting transactions are recorded in order to provide a permanent history of financial activity of the organization into a system, into an accounting system. And then all transaction will be summarized in the form of financial statement. For example, in the statement of profit or loss, and statement of financial position, and other related statement. And then the financial statement are analyzed, and the results of the analysis will be used to guide users on their decision making. The accountant is also required to interpret the reported information, and interpretation involves analyzing and explaining the meaning, uses and limitations of the reported data of the financial reporting that they produce. And the final process is involved in communicating the financial information, in sharing the financial information to various interested parties, such as, for example, shareholders and the management, through the accounting report that we call it the financial statement. Now let us look at the branches of accounting. In accounting, we can know that there are a lot of things that we can do as an accountant. In accounting, there are a lot of sub-accounting functions, which are, for example, financial accounting, cost accounting, management accounting, internal and external auditing, taxation including SST, company tax, personal tax and others, forensic accounting and financial criminology. This one is related to the investigation and any financial manipulations of financial accounting. This one is under forensic accounting and financial criminology. And in accounting, we also can learn about the risk management, treasury part, and investor relation, which is more related to finance analysts, and sharing and delivering or communicating the information of the company to the external users, for example, like shareholders and financial analysts of investment bank. And there are more branches of accounting that we will learn from time to time, and this is the basic branches of accounting at this moment. Now, after we know all the branches of accounting, and I hope that all of you understand and all of you can get idea what is accounting all about, what the accounting is all about. And if you are interested in accounting, this is the opportunities in accounting that you can grab. Okay, there are some opportunity for you on the financial, managerial, taxation and other accounting related. For the financial, the opportunity that you can take is on the preparation of financial statement, analyzing, auditing, on regulatory, on consulting, planning and criminal investigation, on managerial and on general accounting, cost accounting, budgeting, internal auditing, consulting, controller, treasurer and strategy. On the taxation, the preparation of taxation, tax planning, regulatory tax investigation, consultation, enforcement, legal services and estate plan. And for accounting related, which is related to lender, consultant, analyst, trader, director, underwriter, planner, appraiser, FBI investigator, market researcher, system design, merger services, business valuation, forensic accounting, litigation support and entrepreneurs. And you can see by taking this accounting this accounting subject or this accounting program, there are a lot of opportunity outside that you can grab. And I hope that you know the accounting scope is wider, and you can be anything you want by taking the accounting program. When you know the branches of accounting, when you know the opportunity in accounting, and now I will share with all of you, my student, on the on the audit firms that we have in Malaysia, international and local company. There are thousands of audit firms registered with Malaysian Institute of Accountant. For example, okay, I just took the big company to be an example for all of you. For the big four, we have KPMG, we have PricewaterhouseCoopers, we have Ernst & Young, we have Deloitte, we have BDO, Crowe Howard, Grant Thornton, RSM, we have AFTAS, we have Parker Randall, we have Parker Tilly. For local, we have Salihin and AFTAS. And you can get all the list of audit firm in the Malaysia Institute of Accountant website. And then from that, you can know there are thousands of audit firms in Malaysia that you can work with and you can intern with them when or if you take Bachelor of Accounting. And by knowing all the audit firm, now I will share with you some of the professional bodies and certificate that you can get if you want to join the accounting program. Okay, some of the professional bodies that you can register or you can enter in is the ACCA, ICAEW, the Association of Chartered Certified Accountant, the Institute of Chartered Accountant in England and Wales, CPA Malaysia, the Malaysian Institute of Certified Public Accountant, CPA Australia, CIMA, and you can be the member of the Malaysia Institute of Accountant. The next subtopic is on the objective of the general purpose of financial accounting and reporting. And now we continue further to the general objective of financial reporting and financial accounting. The objective of a general purpose of financial reporting and accounting is to provide financial information about the reporting entity that is useful to existing and potential investor, the lender, and other creditor in making decision about providing resources to the entity. This definition or this objective are taken from the conceptual framework of financial reporting. And on the easier way to explain more on general objective of financial statement, the general objective of financial statement is to provide financial or accounting information about the company financial performance and financial position that is useful to a wide range of users in assessing the capability of a company's management to making economic decision. Okay. The most important thing is, for example, for the user to know whether the company is making profit or loss, and if the shareholder or the potential investor would like to buy, to hold, or to sell their share in that company. Okay, to become more easier for you to understand about the general objective of financial accounting or financial statement or financial reporting is to gather accounting information with respect of financial performance and financial position of a business for the purpose of preparing the financial statement to a wider range of variety of user of financial statement to analyze, evaluate, and assess the situation of the business management for the user to make economic decision. By knowing the general purpose of accounting, now we go to the purpose of financial accounting. This is the basic purpose of financial accounting. The first one is to keep a permanent and systematic record, to protect business property, to to ascertain the operational profit or loss, to measure the outcome of business, to ascertain the financial positions of the business, to portray the liquidity positions of the company, and then to facilitate rational decision making, to provide accounting information system, to measure. By having the financial accounting, we can measure the credit worthiness level of the company, to measure the level of efficiency on the usage of resources, and to satisfy the requirement of various parties and agencies like the Malaysian Financial Reporting Standard (MFRS) and the Companies Act 2016. Okay, the first one is to keep a permanent and systematic record in an accounting system or the accounting software. And when we have all the proper documentation, then we can protect our business property, as well as we can protect our business from the external parties, but like the rivals, for example, like the competitors, and as well as any related party that would like to sue us. And by having the financial accounting, we can know the operational profit or loss of the company, and we can measure the outcome of the business, the result from the business that the company did. And then to know about the financial position of the company, and to check whether the company is having a good liquidity positions or not, and to help to facilitate the management on making the rational decision, is either, for example, to continue with that project or to stop that project and continue with the other project, or planning to create another project, or any decision that can give advantage to the shareholders, and then that will give the return to the shareholder. And by having the financial accounting, it will provide accounting information system, and we can provide the information to the external user. And to measure on the credit worthiness level of a company, this is more to the banker, the borrower, and the borrower, as well as the creditor or the vendor. And by having this financial accounting, we can know whether the company is used their resources efficiently and effectively or not. And by having all the financial reporting, we can satisfy the requirement from various parties and agencies. We need to follow Malaysia Financial Reporting Standard, under the Malaysia Accounting Standard Board, and as well as the Companies Act 2016. Now let us look at the users and the users of accounting information. The users of accounting information can be divided into two: the internal users and the external user. For the internal users, we can divide it into the management and the employee, while for the external user, we can divide it into the direct interest and indirect interest of the user of the accounting information. For the external user of accounting information, this one is related to external party, which is financial accounting provide the external user with financial statement. Example of user is lender, borrower, banker, the shareholder, government, consumer group, external auditor, and consumer. For the internal user of the financial information, we have manager, internal, officers, director, internal auditor, sales staff, budget officers, and controller. On the other hand, for internal user, we have business owner, we have shareholder. We have company officer, management. For example, marketing manager, finance manager. We have employee, we have employee union. For direct interest means that for those who have direct interest of the company, for those who invest money, for those who giving credit for the company, and for those who give loan, means they have very very close interest to the company. An example of direct interest group or direct interest per direct interest party is current investor or future investor, supplier and creditor as well as the debtor, bankers, lender and borrower. For indirect interest, which means that they need our financial information but they don't have any interest on that company. We have government authorities and agency, for example, a security commission, tax authority like Inland Revenue Board. We have consumer and our customer. We have public as well as the financial analyst. This is some of the example of users and uses of accounting information. There are a lot of reasons why the users need the accounting information. For example, current and future investor. Current and future investor are very concerned about risk and return of their investment. For example, how much dividend that they will get or that they will earn from that company on annual basis or semi-annually. And then whether then for current and future investor, they need to determine whether they want to buy, to hold or to sell their shares and investment in that company. And current investor and future potential investor need the financial information about the business liquidity position and finances, the business prospect and the ability to generate profit, and the ability of the management to handle the business wisely, efficiently, effectively, and ultimately for the interest of the shareholders. For the management use financial information as a guideline to plan, to organize and to control the organization and analyze the performance of the business. And for the finance department or the finance manager, financial information enables the finance department to evaluate the ability of the organization or the company to pay its business debt. That one is one of the reason. For the marketing department, financial information is used as a guideline to determine the policies and the price of the product to be marked. And the price must be competitive and must be able to compete with the rivals or the competitors' price in the market. And for employees, they want to assess the stability and the profitability of their employers, whether they can work in a short-term or long-term period with that company. And they need to know the ability of the company to provide their salary and other benefit like medical benefit as well as the retirement benefit, bonus, ex gratia, and other benefit. And on the employment opportunity, whether there is a promotion in the future and whether there is an increment given by the company, all those things is required to by the employees so that they know the company, so that they know they can work for a long term or in the short term with that company. And for the employee, union, lenders, banker, borrower, supplier, creditor, customer and consumer, government agency and public, this is some of the reason why they need the accounting information. For employee union, an employee union use financial information to ensure that their demand to the employer, such as salary increment and other benefit, are reasonable compared with the company financial ability. And lender, banker and borrowers, they need to assess the ability to settle amount owed to them when due, for example loan and interest, because they are giving loan to the company and they need to know whether the company is able to pay, to repay back all the money that they give to them. And for the supply and creditor, we know that for example, the inventory or the stock or the goods is being delivered to the company by credit, so that they would like to know whether the company is able to pay or to pay all the invoices, all the items that the company take before. So the supply and creditor, they need to assess the ability to settle the amount owed when due over the short-term period, over a short period or a long term, if the company is likely to be their permanent customer. And for consumer and customer, they need to assess the ability of the company to continue providing the product and services for a long-term period. And for government and agency, the information is about allocating of resources and the activity of the company. Then the information enable them to regulate the business activity, determine the tax policies and the basis regarding the national income and similar statistics. And for public, they want to assess the contribution to local economy, for example employment and business opportunity for local supplier, and trend and recent development in prosperity of the company and the range of activity. And the most important things for the public the public that they would like to know is on the corporate social responsibility. More corporate responsibility means more activity to the public, and by having a lot of activity involved with public, so then the public can trust the company more. This is the details of the users and uses of accounting information, and I will not be discuss this information as this is the detail that students need to read on their own, on your own, because some of the users and users are discussed earlier in the previous slide. Now we go to the types of business formation. In this chapter, we will learn some of the business formation, some of the types of business formation. For example, we have sole proprietorship, we have partnership, we have limited company, and then this one is for profit making company. On the other hand, we will learn about the non-profit organization as well. For the sole proprietorship, the capital is on the owner, and the ownership is one, liability is unlimited, and the profit or loss belong or borne by the owner. For partnership, is contribution by the partner. For limited company, contribution by shareholders through purchase of share. And the rest student can learn by yourself in terms of ownership, liability, profit or loss, and book and account. This is the details of type of business formation for the profit motive company. First is on sole proprietorship or sole trader. This is a small organization. The owner is inseparable from the business, means that owner and business is the same entity. For the partnership, this is a type of business formation where two or more people share ownership of a single business. And for the company, this is a separate legal entity between the company and the owner of the company. And the owner of the company cannot be liable on anything related to the company. And then we have the non-profit making company, which is the cooperative and the society. A cooperative is an autonomous association of persons united voluntarily to meet their common economic and social need through a joint owned and democratically controlled entity. For example, like orphanage, like old folks home, like any association which related to anti-drug association and others. And for the societies, they do not exist with the primary purpose of this is a non-profit making company, and such entity normally exists with the primary purpose of furthering the interests of its member. For example, we have chess club, we have badminton club, we have tennis club and others clubs, so that all the member can join together, and the club exists to allow chess. For example, chess club, the club allowed chess players to play the chess together. Now let us look at the component of financial information. In the financial statement, we have 5 components. The first one is SOPL, second is SOFP, third is SOCE, SOCF, and notes to the account. SOPL is the statement of profit or loss. SOFP is the statement of financial position. SOCE is statement of changes in equity. SOCF is statement of cash flows, and notes is notes to the account. And for foundation level, we will learn on the 2 components, which is on SOPL and SOFP. Now we go to the last topic for this chapter, which is on qualitative characteristics of useful financial information. Everybody know that all the users of financial information, they need a useful financial information so that they can make decision. For example, the shareholder, the investor, they can make decision by having the useful financial information in terms of investing or de-investing of their investment. And these qualitative characteristics of useful financial information are extracted from the conceptual framework of financial reporting, and we will discuss just a brief about this qualitative and not very detailed. And for those who are very interested to know on the deep information about the characteristics, about the qualitative characteristic, after this you can take Bachelor of Accounting. As been informed earlier, the qualitative characteristic of useful financial information is extracted from the conceptual framework of financial reporting. Under the qualitative characteristic of useful financial information, we have 2 levels. The fundamental qualitative characteristic, and the second one in enhancing qualitative characteristic. First is fundamental, second is enhancing. So we have 2 groups. The first one, the financial, to be a useful financial information, the financial information must be relevant and faithful representation. Materiality is under the relevant, and we will discuss it later. And on the enhancing the qualitative characteristic, and for the financial information to be useful, the financial information need to be comparable, verifiable, timeliness, and understandable. So there are 4 characteristics on the enhancing aspect, which is on comparability, verifiability, timeliness, and understandability. And to have a useful financial information, the management need to incur cost. And the cost constraint, the limitation in terms of cost, will be discussed further why there are some difficulties on providing the useful financial information, financial reporting to the users of financial information. This is the diagram of the qualitative characteristic extracted from this website. And this is not mine, this is come from this website, extracted from this website. And the decision usefulness are divided into two, which is relevant and faithful representation. This is in line with the conceptual framework being discussed in the previous slide. In relevant, we have predictive value. The information must have a predictive value so that the information is relevant and this is useful. Then the information must have the confirmatory value and must have the materiality on the relevance part. On the faithful representation, we have completeness, neutrality, and free from error. And on the enhancing qualitative characteristic, we have comparability, consistency, verifiability, timeliness, and understandability. And then the cost effectiveness on the benefit of which means that benefit is exceeding the cost. That one is on the cost constraint. Now we go to the detail of the fundamental qualitative characteristic. Under fundamental qualitative characteristic, we have relevant and faithful representation. And materiality is under the relevant area or relevant scope. Relevant financial information is capable of making a difference in the decision made by the user if it has a predictive value, it has a confirmatory value, or both. So means the financial information become useful when the financial information is relevant. When we say relevant, it must have two things, two items. First one is on predictive value and the other one is the confirmatory value. Financial information has a predictive value if it can be used as an input to processes employed by user to predict future outcome. Means the financial information can be used by the shareholder to predict what will happen in future so that it will be a relevant financial information. The predictive value and confirmatory value of financial information are interrelated. Information that has predictive value often also have the confirmatory value. For example, revenue information for the current year, which can be used as a basis for predicting revenue in future years, can also be compared with revenue prediction for current year that were made in past years. And the result from those comparison can help user to correct and improve the processes that were used to make those previous prediction. And on the materiality, information is material if omitting it or misstating it could influence decision that the primary user of general purpose financial report make on the basis of those report, which provide financial information about specific reporting entity. Material, the information is material if you omit or you misstated it could give impact to the decision. Now we go to the faithful representation. Information which is useful should faithfully represent the actual situation of a business or entity. You cannot hide something from the external party about what is happening in that company. You need to be faithfully represent the actual situation of what is happening in that company. And to provide faithful representation, information should be complete, neutral, and free from error. Complete information includes all information necessary for user to understand the business standing. The information that is neutral is not slanted, weighted, emphasized, de-emphasized, or being manipulated. In the other word, an entity cannot select information in favor of one interested party over another. And free from error means there are no error in the information or omissions of information. On the enhancing quantitative characteristic, we have qualitative characteristic, we have comparable, the information can be compared, verifiability, timeliness, and understandability. Okay, on the comparability, user's decision involves choosing between alternative. For example, selling or holding an investment, or investing in one reporting entity or another. So comparability is the qualitative characteristic that enable user to identify and understand similarities in and differences among items, so that when we call the information is useful, the information must be comparable. And in terms of verifiable help assure user that information faithfully represent the economic phenomena or it purport the represent. Verifiable means that different knowledgeable and independent observer could reach consensus, although not necessarily complete agreement. And quantitative information need to be a single point estimate to be verifiable. You can verify the information, and when it can be verified, then it can be a useful financial information. Now let us look at the timeliness and understandability. Timeliness means having information available to decision making in time, to be capable of influencing their decision, must be in time. Okay. On the understandability, classifying, characterizing, and presenting information clearly and concisely makes it understandable. Financial reports are prepared for users who have reasonable knowledge of business and economic activities and who review and analyze the information diligently. At times, even well-informed and diligent users may need to seek for aid of an advisor to understand information about the complex economic phenomenon. And sometimes we prepare our financial statement in a complex manner, and sometimes the user of financial information cannot understand what we are trying to say actually. And lastly, to provide the useful financial information, actually we need money. Okay, to provide useful financial information to the user require cost. And when cost incurred, it will reduce the benefit of the shareholders, for example. And this is the cost constraints on the useful financial information, because by providing the very useful financial, it requires cost, and the cost will reduce the return of investment and will affect the dividends of the shareholder. And from that, sometimes the company is in hard situation to provide a very useful financial information to the user of financial information, because it might incur the cost. And this is the reference that I use in the preparation of chapter 1. And some of the information is not my information, and I extract from various sources, and one of the sources is on the Financial Accounting and Reporting 1 book by Azlina Ahmad and others. And lastly, I hope that all of you understand and now know what accounting is all about, and you can get some idea actually what is accounting, why we need accounting, and how the accounting become a useful financial information to the user, and why user need the accounting information. With that, I end my presentation for chapter 1, and we will continue with chapter 2, and hopefully all of you will understand, will stay together with me for the whole semester, and stay with us and stay with us. Okay, with that, I end my presentation. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.